Have you ever wondered why governments seem to be so against the idea of cryptocurrencies? It's a question that has puzzled many, and with good reason. In a world where digitalization is at the forefront, why are these digital currencies, these pioneers of a potential financial revolution, facing such resistance? Cryptocurrencies, with their decentralized nature and blockchain technology, present a new frontier. They offer the promise of a world where financial transactions are transparent, secure, and free from the control of centralized authorities. But it seems this is a world that many governments are reluctant to embrace. Is it due to fear of losing control? Is it the potential for misuse in the hands of criminal organizations? Or is it simply a lack of understanding, a hesitation to step into the unknown? These are questions that we will explore in this video. Let's delve into the timeline of government actions against cryptocurrencies to have a clearer picture. The relationship between governments and cryptocurrencies has always been tumultuous. This tension seems to have been present since the birth of Bitcoin in 2009. Let's take a walk down memory lane. In 2013, the United States was one of the first countries to regulate Bitcoin, with the Financial Crimes Enforcement Network declaring that Bitcoin users are subject to regulations applicable to financial institutions. This marked the beginning of a global governmental interest in digital currencies. Fast forward to 2014, we saw China making its first move against cryptocurrencies, banning financial institutions from handling Bitcoin transactions. This was China's initial step in a series of actions to control the crypto market within its borders. In 2015, the European Union's top court ruled that Bitcoin should be treated like a currency, not a commodity, for tax purposes. This ruling was a double-edged sword, offering legitimacy but also opening doors for regulation. By 2017, the heat was really on. South Korea, a country with a significant crypto market, issued a ban on anonymous trading of cryptocurrencies and later in the year even considered a complete ban. The following year, India's central bank prohibited banks from dealing with crypto businesses. This move was later overturned by the country's Supreme Court in 2020. And who can forget in 2021, when China, the world's largest crypto market at the time, made the bold move to ban all cryptocurrency transactions and mining, causing a global ripple effect. This year, 2024, has seen countries like Canada and the UK taking steps to regulate cryptocurrencies, aiming to strike a balance between innovation and risk management. From these events, it's clear that governments worldwide are grappling with the challenge of regulating a new, complex and rapidly evolving industry. Each move they make sends shockwaves through the crypto community, impacting investors and businesses alike. This timeline paints a picture of a global crackdown on cryptocurrencies, doesn't it? Yet despite these actions, cryptocurrencies continue to thrive, demonstrating their resilience and the strong belief in their potential. So, what exactly is it that makes governments so wary of cryptocurrencies? Well, it's not as complex as you might think. Let's unravel the skein of concerns that governments around the globe have with these digital currencies. First off, there's the matter of regulation. Cryptocurrencies operate on decentralized systems, making it challenging for any government to exercise control. This lack of regulation opens the door for potential misuse. Criminal activities such as money laundering and financing of illicit activities can be carried out with relative ease, bypassing the watchful eyes of financial institutions and law enforcement agencies. Then there's the issue of economic instability. As we've seen with the rollercoaster ride of Bitcoin's value over the past few years, cryptocurrencies can be extremely volatile. This volatility can lead to financial bubbles, which when burst, can cause significant economic disruptions. Governments tasked with maintaining economic stability naturally view this with trepidation. Additionally, cryptocurrencies pose a threat to traditional financial systems. They challenge the very notion of centralized banking and government-issued currencies. If cryptocurrencies become the norm, the power balance could shift dramatically, leading to a potential loss of control for governments over their economies. Furthermore, the anonymity afforded by cryptocurrencies can be a double-edged sword. While it may be a boon for privacy-conscious individuals, it can also facilitate tax evasion and other financial frauds. Governments, whose revenues depend heavily on taxation, are understandably concerned about this aspect. Finally, there are concerns about energy consumption. Mining cryptocurrencies, particularly Bitcoin, requires a significant amount of energy, contributing to environmental degradation. As the world grapples with climate change, this is a concern that cannot be overlooked. These concerns, while valid, are not the full story. Yes, cryptocurrencies do pose challenges, but they also offer immense opportunities. As we move forward, it's crucial to strike a balance between harnessing the potential of these digital currencies and mitigating the risks they present. But that, dear listeners, is a topic for another time. The cryptocurrencies have a darker side, one that is often exploited by criminals. Now, this is not to breed fear or to paint an entirely negative image. Rather, it's to showcase the full picture. Cryptocurrencies, like any other tool, can be used for good or ill, depending on the user's intent. So, let's delve into this shadowy realm. One of the main ways cryptocurrencies are misused is through money laundering. Cryptocurrencies, with their promise of anonymity, offer a convenient channel for those looking to clean their ill-gotten gains. A criminal can easily move large sums of money across borders without the oversight of central banks or governments. But it doesn't just stop at money laundering. Tax evasion is another concern. The anonymous nature of cryptocurrencies makes it difficult for governments to track income and collect taxes. This not only undermines the government's revenue stream, but also creates an unfair economic system where the burden of taxation is shouldered by those who choose to play by the rules. And then there's the dark web. This part of the internet, inaccessible by traditional search engines, is a hotbed for all sorts of illicit activities, from drug trafficking to illegal arms sales. Cryptocurrencies serve as the de facto currency here, enabling these transactions while maintaining the anonymity of the parties involved. This misuse of cryptocurrencies isn't just a hypothetical concern. Real-world cases abound. From the infamous Silk Road marketplace, which facilitated illegal trade using Bitcoin, to more recent cases of cybercriminals demanding ransoms in cryptocurrencies. These instances provide tangible evidence of the potential dangers associated with cryptocurrencies. These illicit activities, fueled by the anonymity and lack of oversight in cryptocurrency transactions, understandably make governments apprehensive. They not only pose a threat to national security, but also undermine the stability of the financial system. So, while cryptocurrencies bring about a host of benefits, their misuse cannot be overlooked. They present a significant challenge for law enforcement agencies worldwide and add fuel to the fire of government concerns. The misuse of cryptocurrencies certainly gives governments a strong reason for their stance. Cryptocurrencies, like any other innovation, have their pros and cons. Let's start with the positives. First off, cryptocurrencies promote financial inclusion. Traditional banking systems often exclude individuals due to geographical location, lack of identification, or inability to maintain minimum balances. Cryptocurrencies, on the other hand, are accessible to anyone with an internet connection, reducing barriers to entry and enabling more people to participate in the global economy. Second, cryptocurrencies offer a level of privacy not present in traditional banking systems. Transactions are pseudonymous, which means parties are identified by public keys rather than personal information. This can protect users from identity theft and fraud. Third, cryptocurrencies are decentralized, meaning they're not controlled by any single entity, like a government or a bank. Instead, they're maintained by a network of computers known as nodes. This decentralization can provide a level of security and resilience that centralized systems can't match. But with the good comes the not so good. As we've discussed in previous scenes, one of the main concerns surrounding cryptocurrencies is their potential use for illicit activities. The same privacy and decentralization that are seen as benefits can also facilitate money laundering, tax evasion, and other illegal activities. Another drawback is the volatility of cryptocurrencies. Prices can swing wildly in short periods of time, making them a risky investment. This volatility, combined with the lack of regulatory oversight, can lead to financial losses for uninformed or unlucky investors. Lastly, there's the environmental impact. Cryptocurrencies, particularly those that use proof-of-work systems like Bitcoin, consume vast amounts of energy. This has led to criticisms that cryptocurrencies are not just economically, but also environmentally unsustainable. In the grand scheme of things, it's important to remember that cryptocurrencies are still a relatively new technology. As with any innovation, there are teething problems and potential for misuse. But there's also the possibility of transformative change. It's clear that the cryptocurrency debate is not black and white. So, where does this leave cryptocurrencies and their future? As we have discussed, governments have had varying responses to cryptocurrencies. They've been viewed as a threat to economic stability, a tool for illicit activities, and an opportunity for innovation. The future of cryptocurrencies is, to put it mildly, uncertain. Yet this uncertainty does not diminish their potential. Technological advances continue to push the boundaries of what's possible, and cryptocurrencies are at the forefront of this digital revolution. They challenge traditional notions of currency, privacy, and control, offering a glimpse into a future where financial transactions are decentralized and transparent. However, this doesn't mean cryptocurrencies are without their challenges. They must navigate the turbulent waters of regulation and acceptance, both from governments and the public. Will governments adapt to accommodate this new form of currency, or will they continue to resist? Only time will tell whether governments and cryptocurrencies can find a way to coexist. Until then, the debate continues.